Welcome to Private Banking Strategies Podcast with Vance, Lowe, and Seth Hicks, your secret weapon to protect your assets and never have to start over financially again. Vance and Seth help high net worth individuals, families, business owners, and investors structure an asset-protected, tax-free fortress for their families. Learn how to keep what you earn and use the velocity of money to create your own private banking system. Join us on this journey as we explore the secret strategies of the rich and political elite and help you take total control of your financial security. Now, on to the show.
Hello and welcome to Private Banking Strategies with Vance, Lowe, and Seth Hicks. Vance and Seth, what's going on?
Yeah, glad to be here, Darren. We're excited about this podcast with you and looking forward to jumping into content.
That's excellent. Fantastic. Now, I have to say, guys, I am very excited to be here with you. I am the new guy on the block, but I'm eager to learn from both of you gentlemen. So, Vance, I understand that you'll introduce the show topic with the audience. So, what do you have on the agenda today?
Well, today we base the topics on some of the experiences we have on a regular basis, and some of the topics are a little bit seasonal. There's sometimes of the seasons that we tend to spend more money than other times. Vacation, wanting to get out, and then in the winter, it could be spending money on Christmas or whatever else. And so we're kind of in the middle of one of those seasons right now, and I think it's general that we talk about it, but we end up spending the money. We decide we're going to spend some money, and sometimes we try to do budgets and we do a lot of saving. We do all kinds of things to meet our expectations that we want, but we're always under some sort of guideline. We only have a limited amount of income. We only have so much. Why not set up a strategy like the banks and get the money back? And then when you go to work and you bring home a new paycheck, it adds to the total. So we're ever increasing on a monthly basis rather than the average American either staying even or going further into debt. Seth, where are we on the deficit these days?
I think it's over 33 trillion from the printing of money effectively.
Effectively, yes. So one of the educations that we were denied was how to be independent. Schools used to teach people how to survive, how to be able to go out on their own and survive. And they taught how money worked. Seth and I feel that this is our salvation. If we understand how we can be totally independent, living literally off grid, we teach people how to set up their own economies. Well, let me give you a great example of the flow of money that's not happening in your lives. I'm on a trip and I'm almost out of gas, and there's a little town coming up, and I'm doing a calculation right now. Can I make it to the town after this one, or should I stop here to fill up with gas? Well, I decide to stop here, fill up with gas, pay $50 to the gas station, and now I'm gone. But town has a new $50, right? And a town exists to attract new money, whether it's from commerce, tourism, employment, whatever that town does, it's attracting new money coming in. It has to. And a successful town will attract more money coming in than they'll be losing, out the back door, so to speak. It's called Parkinson's Law. So town now has a new $50. That gas station owner says, hey, I just got $50. I'm going to take it across the street to the grocery store. I'm going to buy $50 worth of groceries. But now the grocery store has my $50. The grocery store owner says, hey, I sold inventory. So I'm going to go restock my shelves. So he goes across town to the warehouse, buys $50 worth of inventory, brings back $50 worth of product, and now the warehouse has my $50. Warehouse owner says, I'm going to go get my teeth fixed. So he goes to the dentist, gets $50 worth of dentist work done. Dentist turns around and says, I got to have my car fixed. He goes to the mechanic. Now the mechanic's got my $50. The mechanic turns around and takes it to the restaurant to treat his little daughter and his whole family to a birthday dinner. All in one day. Well, if we set up as a bank, the banks always get the money back. So now I'm going to ask you another question. How and why do you think the banks always get the money back?
I would say that the banks always get their money back by the flow of cash from other places, right? Just like you mentioned, $50 coming into a town, the bank's eventually going to get it back by passing hands down. Am I correct?
That is a really good observation, but incorrect.
Can you please tell us?
Banks get the money back by obligation. So if they get all the money back, they have to lend it, don't they? Under contract. So all money, all resources with the bank presidents, everyone else at the bank, they can't just go take money out of the bank. They'll go to jail. Okay. So they have to borrow it just like everybody else. And that's what we're talking about. If we set up our own system, our own bank, we put all our money in our own bank. And now we have to move money from our bank account to our personal account. That's the secret. So, Seth, expound on that a little more if you want.
Sure. Yeah, well, the banks, they get the money back because they make loans, and they generally collateralize their loans. They take a mortgage, a lien instrument against your car until it's paid off. They take a lien against your house till it's paid off. They take a lien against your business till it's paid off. And all of the people that, are in that town example, let's say they all bank at the corner bank on First and Main, and it's Wells Fargo or Bank of America. There's a different way. And you can actually set up your own banking system where the money comes back to you, and you set up agreements between your banking entity and however you borrow the money. Let's say you have a business and you borrow that money out of your banking entity and you lien the business for the loan that's made to your business. And so all the money that's coming into your control, you set up and put it to work in other lending transactions so that money is flowing back to your bank. And that bank happens to be a whole life insurance contract that's carefully structured in the appropriate way, which you own a part of as an owner of the insurance company. You're getting paid dividends.
If we're going to spend the money anyway, why not make arrangements to get the money back? If we can get the money back, then we can make the interest or the profits that the people who end up with the money are going to get. So let's explore that a little bit. Seth, what can you add to that, in this season?
Sure. One of the mentors and original OGs, we call him Nelson Nash in the infinite banking concept world, who actually utilized this with his own family members. And he had two twin sisters that were nieces of his. And we're going to take a quick look at that. And Vance is going to walk us through that illustration. And we're going to prove to you how you can get the money back, and how not only you can get the money back that you're spending on an automobile expense in this particular case, but that at the end of the road, you will have significantly and parabolically increased your wealth over the alternative methods of financing. So Vance, I'll hand you back the mic and we'll dig a little deeper into twin sisters.
Okay. All of this stems on a couple of strategies that we live by and don't even know. And it's called a get back to zero strategy. Everything we purchase throughout life, we finance. And that's one of two ways. Either we pull money out of production and buy the item. And once we buy the item, where does that leave us? It leaves us back to zero. If we've saved it up and we can't put it to work. Okay, so normally if we have excess money, we've got it working for us. A lot of people think they have their money working for them when they don't. So it's called a get back to zero strategy. Everything, in life, when we think we're doing the right thing, it's still, we end up losing the money. We spend it, it doesn't come back. Cars are a great thing because cars are one of the largest purchases that we make. And people decide, hey, I'm going to buy a new car, but to get the value, I'm going to drive it till it falls apart. Other people say, hey, I'm making a good income, so I'm going to upgrade my car every 2 or 3 years. Even today, in today's economy, the American automobiles industry and the American cars that we have here can be of great value if you know how to use them. And they are a tool. I really enjoy playing with people when I ask them if they have a car payment. A lot of people say, no, I've paid off my car. And I go, that's really, really interesting. So the only way you convince me you don't have a car payment is if you've torn up your driver's license and you're never driving again. Because what's happening to the vehicle? Oh, well, it's wearing out and eventually you'll need another one. So my guru put in a seminar book an illustration on how to finance vehicles. All these experiences in his book were on his family. He had some twin nieces. They were identical twins. And the story he goes on, he set up a financing situation for the both of them to be able to finance vehicles. A lot of people will put money in a CD because CD is really a fast start. If you want something very, very short term, then not now anymore. This was back when they were paying 6, 7, 8, 9% interest on CDs. So he did 2 illustrations. He says, okay, you guys want to use the CD, but I've got another plan for you. If you'll put the amount of savings, which is $5,000 a year, into a contract that I want to show you. It's an old style banking contract. Let's just compare over a lifetime what the 2 differences are.
Did that story feel like it was about you? Do you feel like you are generating a lot of revenue but are not moving forward as fast as you would like? Do you feel you should be making more progress toward your financial goals? Do you feel stuck? Let us help you get unstuck. Are you ready to take action and get your own private bank? Please visit us at www.privatebankingstrategies.com.
And so he went 7 years of them accumulating $5,000 a year, okay? And at the end of 7 years, there was, and I'm gonna look off to the side here so I've got the exact numbers that are in the book. The CD person had $41,000 plus some change, and the person in the policy had $35,000. So there was quite a big difference. But there was enough in both of these accounts for these 2 girls to start financing. And what they did is they took out $10,500 to finance part of their first car. They set up a repayment schedule. This is where people go wrong. They don't pay themselves back. They take the cash, buy the item, but now you have to realize you have to pay yourself back. So you've got the money back again to do it over again. And therefore you break out of the get back to zero strategy. So they paid themselves back annually. Now this is like $166 and some change per month, $3,030 per month. Both of them did. Okay. In the CD, I think
Per year. It's per year.
Yeah, per year. Excuse me.
Let me just interject one moment. So we've got 2 different sisters. One's going to use the private banking strategy, the contract that Vance is describing. One is going to use savings through a CD methodology. At the end of 7 years, the CD sister has $41,000. The person who used the private banking strategy, the other niece, the sister, she had just under 36. So CD sister saying, see, I'm right. I make more out of a CD. You made a mistake. Nelson doesn't know what he's talking about. So they finance their first car. Apparently they buy the exact same cars, and they utilize the $10,550 of the CD for the one sister, and they use $10,550 from the private banking contract that we're describing the other sister. Recap the foundation that we're laying. And they're paying back themselves, both of them, $3,030 a year. So that's just under $300 a month that they're making car payments. CD sister's paying it back into her bank CD, and the other sister's paying it back into her own private banking strategy.
Okay. So this goes on until retirement, and they're paid back every 4 years. So every 4 years they upgrade their car, they trade it in, and they keep financing a new $10,500. So at age 65, they now compare, and the CD sister has $258,000 in her CD account, and the private banking strategy has just under $1 million in her policy. Let me explain that. Who owns the CD bank? Other people,
That's
right?
correct.
And they make all the profits. Well, these special contracts make you an owner of the life insurance company, and they pay profits in addition to the guaranteed account every single year. And those profits were added back in. In addition to that, she got a ton of life insurance, over $800,000 of death benefit paid for during that time as well. But the beauty part starts right now. Seth, kind of walk them through. They're going to start taking cash out. They're now retired and they want to take income out, just for this one illustration.
Sure. So at retirement age, Darian, they've got very disparate amounts to draw from. The CD sister has 200, let's call it $260,000, and the private banking strategy sister has just under $1 million. So they both start to draw down for retirement needs. And this illustration is a few decades old because these sisters were younger when Nelson implemented this. So these numbers change with current day values, but the illustration still remains. So the CD sister pulls out $50,000 a year, and the private banking strategy sister pulls out $50,000 a year. Well, at the end of, as you can tell, 5.5 years, a little more than 5.5 years, 50,000, 50,000, 50,000, 50,000, 50,000, then 34,000. The CD sister's out of money. Her retirement fund is totally depleted. Whereas the private banking strategies sister, she draws $50,000 down into death, and then she doesn't even use it all by the time she passes on. And the death benefit, you made one error, Vance, in discussing the death benefit. She didn't have $800,000 in death benefit.
But by the time she dies, through life expectancy.
Right.
Because you see, the life insurance in these contracts grow every year. The death benefit amount, it increases every single year. So she could take $50,000 out for the rest of her life, however long that was, and still pass $1.3 million to heirs.
That money that you're already earning, that you have to pay for your car, you can do it in a different way. And instead of having nothing at the end of that, you can have a whole lot. Okay. And let's just say that you hold it for 7 years, and each of the sisters, or let's just say you and I, we both hold an automobile for 7 years, and you finance that automobile through the car dealership. And at the end of your financing arrangement with the auto dealership, you don't owe them any more money. You own the car free and clear. Let's say it was $50,000 to start, and then after 7 years, it's worth a $25,000 car. Me, I use the private banking strategy contract. I pay my own banking entity back. So the $50,000 that the car cost, it comes right back into my bank. At the end of that 7-year period, I have a car that's worth $25,000, just like you do, and I've got the $50,000 back, but not just the $50,000. I've got the interest, and I've got the annual compounding return year after year. So I've got 65,000 plus 25. We'll use approximations. I've got a heck of a lot more than you do. So there's a massive difference. Does that make sense?
Oh my gosh,
to you,
100%.
Darren?
It makes sense to me. That's something that everyone here listening today should definitely take into, one, appreciation for what these guys are offering, and then two, reflect on what you guys are doing in your day-to-day life and see how you can switch to the private banking strategy, because it could be the difference, just like our gentlemen here have said in this example, difference between hundreds of thousands of dollars when it's all said and done.
Yeah, Seth, let's tell people how they can kind of find out more. I always tell people, we want to get you ready to take this for a test drive at no obligation. Kind of tell them how we do that.
Sure. Well, the first place that you learn about private banking strategies is on our website. It's privatebankingstrategies.com. That's privatebankingstrategies, all one word, .com. And there you'll have an offer that we give for a book that we like to call a red pill book that dives into some of these concepts. And we've made it available to folks in a PDF or in an audio version so that you can listen to it on the go, or you can read it if you're a reader. And that's our real entry point to understanding some of these concepts that we're talking about, like compounding interest, and how the banking system that most people use is really not a safe place to keep your money. And they're making money off of you, and you can actually make the money yourself. So once you've read that book, we have all of our podcasts available to our audience on our website, and you can start in various places. There's titles that may resonate with you over another. Take a look at a couple of the podcasts. If you want to just start from the very ground zero, start at number 1, where the intro is, and you can get some foundational block work and what we're doing there. If those things resonate with you, then you can schedule a call with Vance through an exploratory call process where he digs in deeper into your particular situation, your family, your finances, your motivations, and starts to begin that process with you in an exploratory call.
Fantastic. Vance and Seth, thank you for your tremendous insight today. I'm sure the audience has a few questions, but after this, they know exactly who to get in touch with. All thanks to you guys. So guys, any last words before we wrap this up?
I just wish everybody out there to stay safe and think smart about money.
Very well said.
Did that story feel like it was about you? Do you feel you should be making more progress toward your financial goals? Do you feel stuck? Let us help you get unstuck. Are you ready to take action and get your own private bank? Please visit us at www.privatebankingstrategies.com.
Thank you for listening to the Private Banking Strategies Podcast. Click the subscribe button below to be notified when new episodes become available.